Hello traders, Gary Wagner with the Gold Forecast coming to you live from Honolulu, Hawaii, 7:15 in the morning here, October the 18th. It is Monday, and gold is absolutely back on a tear, currently trading 1371.05. It has had a tremendous range, and as you can see with this candle that we're looking at here, it is a hammer type candle, or what we'll call a rickshaw man. It's a long-legged, almost a doji-like candle, because the relationship between the open and close, of course it is still trading, is so small. Now, this was a black candle earlier today, and if you recall, we took a look at Friday, the potential that we were at a top. We did that by looking at the Andrews pitchfork and the way that it dropped off of that high at 1388. I'm going to look at that in a second. But what I want to show you right now is we were looking for some sort of a retracement. My question to you and myself is, have we seen that retracement? Let's go ahead and take a look at that again. We're going to look at a Fibonacci retracement from this low at about 1235. We're going to extend it to this high at about 1288, and then we're simply going to take our Fibonacci retracement numbers and move them over. What I'll do is I'll actually extend that for us, and watch where they go. I find it fascinating. Of course, all I have done is simply drawn in the Fibonacci retracement lines, as I said, from our 2 points, the beginning of what I'm calling wave 3 right here, and the end of wave 3, of course, this is at 1388. And what I'm finding fascinating is that if we carry this over, this 23% right here, if you look, is at least at this point the absolute low at 1353. In fact, it does appear as though tentatively this market has had a small pullback again, just as we witnessed on wave 1, where we had the market move up about $100 high to come down, as we talked about on Friday, retrace 23%, and then we saw a move here. This move, rather than being about 1.61, was about 1.4, about a $140 move, and now we have seen this retracement here. And with this candle here, it does appear as though the market is going to continue back higher. Traders, I wanted you to take a look again at what I was looking at that gave us some indication that we would see this retracement. The retracement's been small as it is. As I said, it was a 23% move from that top at 1388. We simply placed our lows at the bottom of these C's, and then, of course, the top of this fifth wave. Let me go ahead and put that in properly. And as you can see, we did, in fact, have the market come in and come directly to this top right in here. But there's another interesting technique that we can do with our Andrews pitchfork. And what that is typically it goes 150 and 0. However, the Andrews pitchfork does allow us to actually place in our parameters, and so what I've been doing with this is, rather than looking at the 0, 50, 100, putting in our Fibonacci retracement numbers, because those lines are going to follow and carry up. Let me show you what I mean. What I have simply done is I've taken our Andrews pitchfork and I have added, this is at 0 count, I've added our retracement levels. Here's 23, and here's 38, and here's 50. The interesting thing about utilizing the Andrews pitchfork is that those levels, as we extend it, you notice they're going to move. They're going to change with us, so they're going to be more adaptable. But here's what I'm also finding interesting. If we go ahead and take a look at it, again, we had that 23% level right in this area be the point in which today's candle hit. Now, one day, of course, does not make a turnaround, but this is simply, as far as I'm concerned, absolutely compelling evidence to have this type of candle, because in essence what it is saying is this: as the market was lower, we had that long black candle, which would have been a confirming candle for this engulfing bearish. However, you had buying the dip mentality, you had weakness again in the dollar. It pushed the market back up, where it's currently actually slightly above, but just at the point in which it began trading. And because of that, it seems extremely, extremely bullish. My sentiment, well, what I am looking for is obviously to re-enter the market from the long side. It's simply a matter of where. I firmly believe that this market is on track for 1400, and I am looking at the upper ends, 1440 to 1450. Anywhere between 1440 and 1460, let's say. That's what I believe is possible and probable for the price of gold over the short run. Once again, I am extremely impressed with the resilience, the sheer magnitude and amplitude in which gold continues to rise. As we look at this, I've put up our moving average convergence divergence. And the one thing that I am noticing is as of now, when we have seen some of these major ends to some of the waves, such as our C wave here, we got somewhat of a confirmation on our moving average convergence divergence. You'll notice that on these tops, they do tend to lag, but they do show you that. Now, when we had this market move from wave 1 and had that 23% retracement right in here, if we follow that moving average line, as I said, it does lag, but you notice we got that cross. My question is, are we going to get that similar cross here? Because that would give me an indication that we actually have gone into wave 5. Our retracements are absolutely so shallow. Our ascensions are absolutely so steep, and the angle is so solid that in a super bull cycle, we are seeing things that, quite frankly, as technicians, we've never seen before. I've never seen gold move like this. Neither has anyone else. For that reason, my belief right now is that this uncharted territory gives us opportunities, but it also gives us some absolute amounts of challenges just in terms of discerning where we're at. There's absolutely no doubt that we did see a retracement. Were we correct to cover and pull profits a couple dollars from here? Well, in hindsight, we could have stayed in the market. However, my belief is that pulling a profit and re-entering the position, buying the breakout or buying the dip, and that's been my plan, is a safer, more prudent way to accumulate profits over time. Our track record right now since the beginning of the gold forecast is up, I believe, about $317 per ounce of gold. We have been tracking this market as it goes up and down, so we have been staying in pace and taking losses and wins along the way, and most importantly, being able to protect any kind of profits by using stops. And stops, of course, have their caveats. There's no doubt about it. But I do find it, as I said, extremely interesting that when I run both our Elliott wave count here, our Fibonacci retracement, and our Andrews pitchfork, and use that for Fibonacci numbers, it seems as though we have absolutely, in a 3-day period, just like here, had a small 23% correction. The one thing that I do want you to note is that when we have seen these particular candle types, these the rickshaw man, the hammer-like indicator, we've seen them at bottoms and they have signaled a major push forward. And for those of you who have been with us for a while, you recall the ones that I'm talking about. And the one I'm really thinking about is the first bottom of C, which is right here on February 9th. This one area right in here. And as you can see, you had this tremendous long-legged doji that really signaled this bottom here. And the question is, are we seeing this candlestick again? Well, absolutely. Here it is. Does it have the same significance? Well, it's not found after a large sell-off. And here, of course, this was the absolute bottom of the market. We actually, on the forecast, issued our buy signal on this candle here right here was when we actually issued the buy signal, and we entered the market at about 1070, if I recall, right in this area, and that was on February 9th. You can actually go ahead and view that tape in our archives. Are we witnessing the same thing? Well, as I said, we absolutely have different parameters here, but at the same time, I find it very, very interesting that we've got this type of a candle once again to kind of guide the way, as you can see, and show us this potential move back to the upside, as you can see right in here. So where's the market going to end up? Well, right now we have to see what it wants to do over the next few days, but it does appear as though we've seen some sort of a correction, and this market, undaunted, in fact, wants to continue higher. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.